This is the Tan Talk Radio Network.
The opinions, thoughts, and observations on the IRS Solution Attorney radio show are not legal advice. Facts and circumstances differ in every case. Do not take anything said on the show as legal or accounting advice. Always consult your lawyer or accountant before deciding how to handle any legal issue.
Welcome to the IRS Solution Attorney Show. If you have problems with the IRS, don't focus on the negative, focus on the solutions. With the IRS Solution Attorney, Darrin T. Mish. For over 15 years, he's been helping taxpayers with IRS problems reclaim their lives and their financial stability. Now, here's your host of the IRS Solution Attorney Show, Darrin T. Mish.
Alrighty, this is Darrin T. Mish, your IRS Solution Attorney. Katrina, today we're going to talk about something that comes up in my practice just about every single day. And that is, we're going to talk about the differences between tax fraud versus just good old simple negligence, you know? Almost every day, not every day, but several times a week, people come into my office and we do initial consultations about their tax problems. And the biggest concern by far is, am I going to go to jail, Darrin? I can't sleep at night. You know, I'm afraid the IRS is going to come in to my home or business and take all my stuff, but I don't want to go to jail. I don't look good in stripes, that kind of thing. I have been accused of having a sick sense of humor in the past. I don't think that would work out real well. I don't think having a camera in the consultation room would work out real well either. So we have none of those things, folks. Just lighten the IRS mood a little bit. Yeah, you know, and we're making light of it, but I have a lot of sympathy for people who go sometimes years, sometimes decades, where this is really the biggest problem in their life, and they really are having trouble every night going to sleep because they just know that the IRS is going to be knocking on the door. Short story about that.
I can imagine how good that would feel, Darrin, to like have this lingering for years and years and years, and then finally be like, oh my gosh, I can sleep in peace. Just
recently, I was hired by a heavy metal rock star in kind of a second tier, you know, heavy metal band, and really, really cool guy. And he called like on a Wednesday, and we couldn't get him into an initial consultation till like Monday. And when I talked to him on that Monday, he said, you know, Darrin, just last night I heard a noise outside my window, and I was just totally convinced it was the IRS, and they were coming in to get me, you know, right before I could talk to you, man. And so I'm so glad to talk to you.
He's thinking they're like outside dressed in black, ready to jump in.
You know, the black Suburbans are coming, you know. And I can say...
You can see that picture in your head when you say that. I can totally see it.
And we're not laughing at him. We're certainly...
No. We're laughing at the situation.
Yeah, we're laughing at how our imaginations can really get the best of us sometimes. And I was able to very quickly dispel that notion out of his head and say, no. We have a very straightforward path.
Well, I mean, that, for you, it's not a scary thing, Darrin, because you do it every day. But for most people, I can see why they would think that.
Yeah, you know, and I'm really working on this. A lot of times people will make a passing comment. Sometimes they act like they're joking about going to jail and stuff when we first start talking. And sometimes I just gloss right over it because it's like so silly and ridiculous in most cases that it's not even worthy of discussion. But I've really been trying to focus on this and circle back to that almost immediately and say, no, okay, let's just get this out of the way. You're not going to jail. At least no one so far has ever had any
That's not the plan.
Possibility of going to jail. And so we try to dispel that notion so that, you know, it causes so much anxiety. It hurts their relationships. It's, you know, hurts their quality of life. And that's really a bummer. And that's not something that you should let IRS problems do to you.
Well, I would imagine most of your people, you know, when you come in and you meet with them, they obviously didn't choose, but somehow something happened and they ended up in this situation. And then it's like a snowball, just gets out of control. And they don't know how to deal with it.
You know, I love to pick on realtors because you happen to be one. And so the stereotypical sort of client would be a realtor who lives closing to closing and just hasn't mastered the concept yet that they're supposed to be taking some money out of every closing check and sending it into the government as an estimated tax payment. And so, you know, especially when you're first starting out, maybe you're doing $30,000 or $40,000 a year in closings, and maybe you're living on your own.
I think the average agent closes like 5 deals a year.
Yeah. Okay. So what's the average deal? Depends on where they are.
I mean, our average sales price in the Bay Area hovers around $225.
Yeah. So your commission's 5,000 to 10,000, maybe.
Yeah, I mean, it depends. One side usually roughly 3%.
Okay,
roughly.
so you're doing
6,
5
7,
closings
8.
a year. That doesn't leave a lot to live on. So nobody really explains that concept of making estimated tax payments. Accountants tend to say, "Well, okay, you owed $8,000 last year, and what we want you to do is make a $2,000 quarterly payment, and here's the due dates, and here's the coupons." Well, we've talked about this before on the show. That's really sort of a silly concept for most people,
Right?
Because typical American human beings, at least, don't budget on a quarterly basis. I mean, who does that? We budget. If we're lucky, we budget on a weekly basis. But, we can kind of get by on a monthly basis. We can understand that concept. So if we broke that $2,000 quarterly down into a monthly number, it's like $650, $675, something like that. And that is something that people can kind of get behind. But for realtors or people who get paid, big chunks at a time, I would typically recommend that they take that, maybe 20 to 30% out and just go ahead and send that money into the government. Because what people do is they borrow the tax money. And I think they have good intentions.
That's a good point.
They borrow it for something that comes up. My classic example is baby needs diapers, right? I mean, but diapers aren't that expensive. But that's what happens is something comes up in life and they borrow the money and they intend to pay it back, but life happens. They didn't budget. They don't understand, and it just gets behind them. But when I was doing the research for today's show, I knew that the percentage of tax crime convictions was really very low. I did not know it was this low. The stat is only 0.0022% of all taxpayers are actually convicted of a tax crime in any given year.
Wow.
I mean, so think about this, okay?
That's not even 0.1%.
Yeah, we've got my buddy, the rock star, who's staying up at night thinking that they're outside the window, and his odds are 0.0022 that he might be convicted. Now, actually, we've talked about this in the past, too, in that our system is based upon voluntary compliance, which doesn't mean that taxes are voluntary. It means that we voluntarily file tax returns, and then we basically self-assess. We calculate the tax, we tell the IRS how much we owe, and then they try to collect the money. Well, in his case, since he has a little bit more notoriety than average, he might actually have a potential of being prosecuted if, again, this is really important, we haven't talked about this, if the government were able to prove that his failure to file tax returns and failure to pay was a willful, intentional event, which, for the most part, the IRS understands that people don't go around willfully not filing
in that
their tax
lifestyle, I can imagine it was willful anyway, because he probably spends a lot of time on the road, right? I mean, his lifestyle is totally different than someone that shows up in a 9-to-5 job every day.
I'm going to have him listen to this show. I think he'll appreciate the fact that he was the big example in the opening segment. But, he was telling me that they at times they don't even have a tour bus. They have a tour RV. They're like, I forget how many guys, 4 guys or 5 guys, all traveling around in a motorhome, and, breaking down and things like that. And yeah, absolutely, you're right, Katrina. It wasn't a matter that he willfully didn't file.
Right, and you look over a period of 12 months. How much is he home? I'm going to guess 2-3 months at best in a 12-month period.
Exactly, and he's not handling the money either. It's someone else who is, collecting the money from the different gigs and venues, and then that's getting dispensed out to the guys in the band. And, they have no bookkeeping system or accounting system. They really have nothing.
It could happen so easily. I told you my example. I mean, I was in my 20s, and I had a bookkeeper that set everything up, an accountant that gave us, and a CPA gave us bad tax advice. And I thought someone else was making the payments, and I had no idea that they weren't until an IRS person showed up at my door. Talk about scary. I wish I knew you then.
Yeah, I've told the story many times that I actually started out in this business because I didn't have one tax problem. I had 2 tax problems. I had one of each. I had one, personal 1040 tax problem because I didn't get estimated tax payments. Nobody in law school ever tells you how to run a business or that anything about taxes unless you took income tax, and then they're not going to talk about estimated tax payments. They're going to talk about higher, more lofty, principles of income tax. But I also had a payroll tax problem because I hired somebody because I couldn't do all the work. I couldn't answer the phone and, do all the pleadings and stuff. And didn't quite get the whole 941 payroll tax deposit thing. Eventually, I figured it out, and I realized I was in trouble. And that led to me figuring out how to solve my own problem and then realizing there weren't a whole lot of people out there that could help.
I think everything happens for a reason, and I think God gave you that problem so you could do this.
Yeah, and I was telling someone yesterday, it's sort of an interesting fact, but when I was 18 years old, one of my first jobs was I was a customer service rep at a printing company that actually printed tax forms.
Oh, wow.
So for 3 years, 40 hours a week, I sold W-2s, W-3s, and various tax forms. And so I actually had a little bit of knowledge, starting out in the practice of law.
I wonder if that was your sign when you were 18 and you missed it.
Yeah,
Might have been.
It could have been. I don't know. I'm just glad that I didn't go and become an accountant. Not because I have anything against accountants at all. I love accountants. I have some that work for me. But the way my brain works and the way an accountant's brain works
They're not wired the same way.
Entirely separate. Accountants, I've said this before, accountants really live in a world of black and white, and lawyers live in like this awesome shade of gray all the time.
For sure. You guys get paid to argue for a living. It's what you do.
Yeah, when I was a little kid, my mom used to tell me that, you're probably going to go to law school because you'll argue with a fence post. So,
gosh, that sounds like conversations with my son, Nick. I'm like, you do something productive with that mouth, like be an attorney or something since you love to argue.
Yeah, I have a young son who's doing the same thing. At age 13, he's already parsing words and saying, well, you didn't say.
Yeah. Isn't that so how an attorney's brain thinks? I mean.
Yeah, definitely some attorneys for sure.
If you can try to just take that young energy, though, and turn it into something productive, it works out.
Well, if they can turn it into studying and being motivated and goal-driven so they get good grades and do well, that's a good thing.
Exactly.
So let's talk about some different things that could constitute tax fraud. As fun as our conversation is, let's provide some value here. One of the things that people do, or that could potentially be a crime, is intentionally failing to file an income tax return.
How do you intentionally fail to file? Like, what's the IRS's definition of that?
Well, I'll give you an example. I have spoken with some people over the years who I actually don't even remember. But they say, well, I was kind of toiling along. I was making $30,000 or $40,000 as a self-employed person. But in this 1 year, in 2006, I hit the lotto, or I did this, or I did that. I made a whole bunch of money. And they want to know, it's been so long now, do I have to file that return? So I would suggest that would be an example where you knew you had a windfall and you just intentionally failed to file. There's some other people, and we're going to talk about some of these news stories later on in the show, where it's pretty clear. In fact, just a little teaser, there's one where you won't believe how they found this guy, where he certainly, intended to commit tax fraud.
So it's a flat-out avoidance. Like, they're just like, I'm just not going to do it.
In the law, we talk about indicia of fraud, okay? I'm trying not to use too much lingo on the show, but it's like indicators of fraud. There's just things that, acts that could be completely innocent, taken in a vacuum, one by one, that would be completely innocent. But when you start stacking those things together, it's pretty clear that you intended to fail to file a tax return. And I would suggest that the longer this period goes on and the more money you make, then that's probably a better, clearer indicator of tax fraud. Now, I don't want everybody listening to start freaking out because they haven't filed a tax return in 10 or 20 or 30 years. That's not necessarily a problem. We've talked about in the past that this.
Where does somebody start? Like, that's a great example and a good point to bring up. If someone hasn't filed it, let's say it's been like something happened 1 or 2 years and it's turned into this pattern. I've seen it myself in my business where they just haven't filed taxes in 10, 20 years. Where does somebody like that start? My
personal record is a gentleman who had not filed since 1960. Came into the office, and I'm not going to disclose my exact age, but
and he's not that old.
I was born after 1960, significantly after. So he was pretty freaked out. He was pretty much convinced that he was going to be going to prison. And remember, the statute of limitations for the crime of failure to file a tax return is only 6 years, and the IRS has an semi-official policy that says if you file your last 6 years' tax returns before they begin a criminal investigation, that they're not going to prosecute you. So ding, 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 ding. Most people are winners in that scenario, right? I mean, we just heard that only 0.0022% of taxpayers are prosecuted and convicted. So, and by the way, most taxpayers who are prosecuted are in fact convicted. So that's a pretty good number.
But if you don't and they start the investigation, that's where your trouble starts?
Yeah, you're going to be in some pretty significant trouble. And I would suggest that if you're a high-level, media personality, movie star, rock star,
somebody they can make an example of.
Judge, lawyer, politician, doctor, I can tell you in the Tampa Bay area that lawyers get visits from revenue officers with very small liabilities. There's some kind of code on our files that we just get special love from the Internal Revenue Service, and doctors do too. And I think it's because, if you have to prosecute a doctor or a lawyer, it's probably going to end up in the newspaper. And that's
Right.
And they don't typically, from my understanding, they don't typically prosecute people who aren't going to get any notoriety. If they're going to prosecute my lawn guy because he doesn't pay tax on all the money that he collects from me, it's probably not going to end up in the newspaper. It's just not that interesting. But if Judge so-and-so, gets prosecuted, it's going to be interesting. It's going to make it in at least the local newspaper, and then everybody's going to think about it, and they're going to say, oh, well, maybe I shouldn't
do that.
Yeah, maybe I shouldn't be fibbing on my
That's a good point, though. I'd love to hear that. So when I run into that out again, I'm going to be like, yeah, you need to connect with Darrin and deal with this now. Don't wait for them to show up, because that's when it gets ugly.
So in some respects, it can be a race. It can be a race to get your stuff done, especially if you've gone, 1960 to now. 55 years, yeah.
But they're wiping out everything, right? Except for the last 6 years?
Yeah, pretty much. They, if you haven't filed for the past 6 years, so let's say year 7, so that would be 2008 now, they're probably not going to ask you for that return. So that's kind of a good thing. I don't think that anybody listening should take that as advice not to file and wait 6 years. So let's talk about the next one. Willful, and I forget about this, or not forget, but I don't talk about this very often. That's willfully failing to pay your taxes due. This is a little bit finer point. So when does your failure to pay become a willful event? Well, I've not seen a lot of these cases. I've not even seen this threatened very often, but I have seen a couple court cases where, in fact, it was a lawyer, as I think about this, a lawyer who maybe owed $100,000 and then shifted around $300,000 to $500,000 worth of cash and assets and put them in other people's names and, buried it in the backyard and that kind of thing. All right, at some point, it's going to be willful failure to pay. I don't think most regular people, who owe $500,000 or something and make $50,000 a year, they're not going to be prosecuted for willful failure to pay. It's not a willful failure. Right. And any court that looks at it is going to see, okay, well, you did not have the ability to full pay. And I even think that most people who, let's say you owed $100,000 and you had $200,000 equity in your home, but there was a federal tax lien filed in the county that you live in, I don't think that's going to be a willful failure to pay either, because the IRS, as much fun as they are to poke fun at and think that they're the devil.
My exact word I was thinking.
For the most part, they're not going to force people to move or sell their primary residence to full pay a tax debt. For the most part, there are people that poke the tiger just a little bit too much, and they get a little extra attention. And sometimes the IRS might come down really hard on those people. But for the most part, they're not going to be demanding that you refi or sell your primary residence to pay a big tax bill. There's exceptions to everything.
If that's reported on your credit, you're not going to refinance anyway.
Well, that's the funny thing. I just had a case this week where one of the demands that the IRS is, they're actually threatening to seize this guy's primary residence, but they want proof that he has attempted to refinance the house.
Yeah, if he's got a tax lien showing on his credit, it's not going to happen.
I won't tell him which 2 institutions to go to, but I said, go to this big one, this big bank, and go to that big bank.
You're going to get. He could go to any bank, Darrin.
Yeah, you're going to get the. Well, I just like the big banks, just because you might as well waste their time.
But I mean, it's with the day and age of change, and we're experiencing more change even next month. It's not going to happen.
Yeah, so he's going to go ahead and get 2 loan denials. We're going to send him over to the IRS, and he'll be all good. He'll be fine. So a third thing that can constitute tax fraud is intentionally failing to report all your income. Now, this is far, far more common than any of the other 2 things that we've talked about so far. Let's think about who intentionally fails to report all of their income. Well, just about every waitress, every hairdresser, every person who deals in cash. And I love waitresses.
I'm just saying, ouch.
So
this is not the person that got maybe 10 or 20 1099s and forgot 1 or 2.
No, that's going to be negligence for the most part, unless they're only the 2 big ones. Then
right.
that might be an indicator of fraud. But for the most part, even if you forgot the 2 big ones, the IRS is probably just going to slap what's called a negligence penalty on you, charge you a 25% penalty, pretty steep. And because they just don't have the time, money, and resources to prosecute everyone who, air quotes, forgot to file all of their 1099s. That's very common. But it's the people who deal in cash. that do intentionally fail to report all their income. But again, 0.002.
Yeah, and how the heck do you chase cash anyway? You can't.
Well, that's a very interesting
they call
question.
it currency for a reason. It moves fast.
Now, there are audit guides for lots of different professions that the IRS has. And the cool thing is you can actually, they're public records. We paid for them. So you can get these audit guides. I often give away the attorney's audit guide to other attorneys. But
we should talk about that. We should do a show, an audit guide for different professions.
Yeah, it goes all through it about, what the things to look for. Lots of attorneys get paid in cash. Think criminal defense attorneys get paid in cash a lot.
I didn't even know that.
Yeah, well.
Now I do.
Yeah. I may have gotten paid in cash a lot in my former life as a criminal defense attorney.
But I mean, think about your clientele. I can see why they'd want to get paid in cash. I just didn't realize they did.
Of course, I reported every single penny of that cash, most certainly.
Of course.
But yeah, think about drug dealers and people like that. I mean, they don't really have bank accounts, and
right.
They're going to pay you in 5s and 10s. And
well, their business activity is illegal anyway, so why would they file a return?
And big disclaimer: I mean, there's a law against being paid with money that is from illegal sources. So, for criminal defense attorneys, that's always something that's kind of worrisome. But so intentionally failing to report all your income is actually tax fraud, and it is something that you're going to need to worry about. One of the things that they can do is they can pretty easily, summons your bank records and just look at them and do an analysis. I have a situation right now where I'm representing a business. I won't even say what kind of business it is. And it's a business that you would expect a lot of cash to run through, and absolutely no cash was deposited into the bank. It was all credit cards. And so,
But you can track all that.
An audit was, instituted because there was zero cash. I mean, the return matched exactly the 1099 for the credit cards. So those are some of the ways that they can find you.
So what happens if you get to that place and it is intentionally failing to report all your income, and they have started this investigation and they're summoning your stuff? Like, where do those cases usually land?
What happens is they can be assigned to the Criminal Investigation Division, or CID, of the IRS. And this is kind of a little cool tip, and that is that typically if an IRS person comes to your door, they're going to show you kind of like a plastic badge kind of thing, and they got no gun on their hip. That's a revenue officer. That's just somebody who's doing administrative work. It's a civil situation at that point in time. But if two guys show up with gold badges and guns, you need to not talk to them. You need to say, "Oh, nice to see you. I have an attorney. I have no wish to make any further comment," because at that point, they've already been conducting an investigation on you, usually for quite some time, and you're going to be criminally charged. And do yourself a favor. You cannot talk your way out. You cannot talk your way out of this. When I was doing criminal defense many years ago, I can tell you that a very high percentage of my cases, I could have mounted a very serious defense, but for the statements made to the police by the defendant when he was trying to talk his way out of the situation. So not talking to law enforcement if you have a fear that you're going to be criminally charged is really good advice. And even police officers would, agree with that.
But good visual observation too, like someone showing up with a badge versus, somebody that looks like Men in Black.
Yeah, they have gold badges. You're in big trouble, man. So let's talk about another one. Making fraudulent or false claims is also obviously tax fraud, right? I mean, false, fraud, So what does that mean? Well, I would say an understatement of income could be a fraudulent or false claim, right? So you make $2 million and you claim $20,000. That's the kind of thing we're talking about here. But even circling back to the guy that I said that didn't report all the cash, he is not being, he is not really a candidate for being criminally charged.
Because he didn't deposit any cash.
Well,
right?
I think that the government could theoretically make a case that was tax fraud, but I just don't think it's worth their time and effort. He's going to end up probably with a negligence penalty, not even a civil fraud, but not even with a civil fraud penalty. There's something that can happen in an audit where the IRS thinks that it rises to the level of fraud, but they choose not to criminally prosecute it. And in those cases, they call it civil fraud, and they assess a 75% penalty. I have a funny story about this.
I guess that's better than going to jail, right?
Yeah, it is. I have a funny story about this. So I'm working on an audit for a client. This is many years ago. And we're going through checks, and the auditor stops and looks me dead in the eye, and she says, "Do you realize that your client has altered these checks?"
What?
And I had the same reaction. I'm like, no, I have absolutely no understanding that that's what's happened. And that's when I learned that on the bottom of a canceled check, there's a bunch of numbers.
Right.
And the numbers actually coincide with the number on the check.
Right.
And what he had done is he had whited out the canceled checks, wrote in different numbers, but he didn't know about the numbers
on
along
the
the
same
bottom.
check. Oh my gosh.
And so it was a surprise to me. And ultimately, I'm not even sure he was charged with civil fraud. I think he was.
Yeah, but like seriously, if you're going to hire an attorney to help you do something, don't lie to the person that's in your court.
Well, for sure.
I mean, really, how can you help someone that lies to you? I mean, you just can't. You don't have the whole picture.
We would have actually done better if he had not done that than after he did it and, got caught. So I like that story just because I learned something in that story. I learned that those numbers along the bottom of the check actually mean something. I always thought they was just kind of gobbledygook.
No, that I knew. So your routing account check.
And the last kind of fraud that's pretty common is preparing and filing a false return. A lot of these things are sort of, closely related. But a false return would be, any return that doesn't accurately portray what the situation is. I think it has to be very false.
Like what? Like what's an example of that? Prepares and files a false return, like just totally making something up, like adding numbers?
Well, we have a news story that we're going to talk about a little bit later where they basically wrote off all kinds of really big personal things. I think that's preparing and filing a false return. Where you're not, these aren't judgment calls. These are clearly examples of things that you cannot write off as a business deduction, like golf clubs. Now, maybe for Tiger Woods, golf clubs, would be a tax deduction, but not for...
Well, it depends. So, isn't that questionable? Like, here's what my attorney brain is on. Like if you network and you do stuff on the golf course, and that you can clearly prove that's where a lot of your revenue comes from, perhaps, right? Maybe.
I think that's a very long stretch.
Huh.
I don't think Tiger Woods. It would be a tool of his trade, right?
Correct.
It would be like a mechanic with wrenches. But I don't play golf, but I actually think a golf course is a poor example of a perfectly good rifle range. But, I think...
Well, I'm just thinking about the whole debate I had with my accountant about, having my CWP and the weapon being a, tool.
Oh, my
and it's
goodness.
as a tax deduction.
Yeah. I don't think...
There was just robberies and everything else, like yesterday.
That's interesting. I don't know. I have not seen anybody...
It's not like I'm buying 10. I bought one.
I don't know. I haven't seen anybody try to write off... their carry firearm.
So
I'm not sure
the funny
about that.
part is like my husband, myself, and the tax lady, and she's like, here's Katrina, here's the rest of the world. And she's going, the IRS doesn't work like this. And I go, well, I could argue that.
Well, we're kind of kidding around here, but you don't want to do things that are so aggressive that they pop an audit on you, because an audit is going to be a painful, expensive experience for everyone. Even if you win and you get a no change audit, and even if you represent yourself, there's still going to be time and anxiety wrapped up in trying to get the receipt for the little carry gun so you can prove that was necessary and ordinary business expense.
Yes, my accountant used that exact word. Necessary and ordinary business expense.
So I think it's time for a break. When we come back, let's talk about that really crazy story of the guy who is being charged with tax fraud and how the police actually found out.
Pick it right back up where we left off. We'll be back in a minute.
This is the Tan Talk Radio Network.
Curious what your Tampa home is worth? Here's an easy way to find out what homes like yours are selling for in today's market. Text the word value to 813-377-2775 for a free report on Tampa house prices. We'll send you a free report with up-to-the-minute statistics based on all homes for sale sold in your neighborhood over the last 6 months in all price ranges. To get your free report on Tampa Bay house prices, just call or text the word value to 813-377-2775.
Are you suffering from IRS problems? Do you owe back taxes you can't pay? Is your paycheck or bank account being levied? Or maybe you haven't filed tax returns in years and simply don't know what to do. This is Darrin Mish to tell you that if you're tired of IRS problems hanging over your head and are ready for a fresh start, we may be able to help. call the law offices of Darrin T. Mish at 888-GET-MISH, 888-GET-MISH. I can help you file old tax returns, work to release tax liens or stop wage levies, even negotiate deals to pay off back taxes at a discount, sometimes for pennies on the dollar. Hey, let's face it, these days it's not hard to get into tax trouble. A divorce, failed business, health problems, you name it. The point is, IRS problems may be solved if you're willing to take the first step. Call for a free consultation at 888-GET-MISH. That's 888-438-6474. Or go to the web at getirshelp.com, because the one sure thing is, IRS problems don't solve themselves. So get Mish. 888-438-6474. Principal Office, Tampa.
Ask me about an inside secret to save several hundreds of dollars on your annual homeowner's insurance premium. Text the word WIND, W-I-N-D, to 813-377-2775. Again, 813-377-2775. Hi, I'm Katrina Madewell, host of Tampa Home Talk. I'm going to give you market-appropriate, timely information regarding homeownership matters, because we want to make your everyday life better. Wherever you are in life, it's our mission to bring you good advice so you can maintain good credit, live within your means, and build wealth. My team and I are passionate about it. Love where you live, or I'll fix it. Tampa Home Talk on WTAN every Thursday and Saturday at 5 p.m.
This is the Tan Talk Radio Network. This is the Tan Talk Radio Network.
Welcome back. I'm the IRS Solution Attorney Darrin T. Mish with my co-host Katrina Madewell.
That's me. Welcome back to the show. We had a fantastic first part. If you missed it, catch it in its entirety on a podcast under IRS Attorney Solution Show. We're talking all about fraud versus negligence and shared some really good stories and examples of what each of those mean.
Yeah, you know, in doing the research for the show, I came across this really great example. It's currently in the news. It's a story out of Pittsburgh, Pennsylvania, and the way I remember the story is there was a gentleman, or actually there were some law enforcement agents that were flying in and out of Pittsburgh Airport on a regular basis, and they noticed on the flight plan over the course of about a year that there was just an unbelievably enormous house, probably better characterized as a compound. As I recall, the square footage on the house was about 35,000, and it was the biggest single residence in the whole state of Pennsylvania.
Yes.
And as they were flying in and out of this house, and there might have been a little bit of envy going on with these cops, I mean, like,
never know.
That's a pretty. I mean, I've seen a picture of this particular house, and it's like a castle. And they were kind of wondering, well, who lives in the house, and what's the deal, and how could this person possibly afford it, and what's the story? And turns out that there was a local businessman that lived in the house, and he had a straw person. He had an employee who was basically hiding some income and writing off all of this income and paying for this big mansion for this business owner to live in. So I would suggest he's in pretty hot water. He's probably going to do a couple years in prison.
This says that the criminal complaint alleges construction of the home, upkeep, the swimming pool, a Rolls Royce, other vehicles, chefs, butlers, all put on the books as a business expense.
Okay, so your question was, what's a false return? That one. That one's a false return.
What was his business? Do you know, like what he actually did for a living?
I think he was in construction, actually, which kind of makes sense. But I'm not sure. I don't really recall exactly. But that would be an example, of somebody who is clearly committing fraudulent acts. There's an old saying that most people have probably heard, and that is that pigs get fat and hogs get slaughtered. This guy was, very hog-like in his behavior. There's lots of people that might fudge, might forget to actually report some income, or might take an excess deduction. They might actually claim their firearm as a business expense as a realtor. But things like that. That's like pig-like activity. That's not hog-like.
Really, I think
activity.
that's debatable. Oh, pig. Okay.
Yeah, pig-like.
Wait a minute. I was gonna say.
That's
one little one, not a freaking 50 cow. Come on.
But is it debatable that this guy writes off the Rolls Royce and the butler?
Yeah, right. Well, according to his attorney, he says it's a tax dispute and nothing more.
Well, any good attorney is going to make a statement like that. I would venture to guess that attorney right now is probably having discussions with the U.S. attorney and trying to cut a sweetheart deal and trying not to have all of his clients' assets forfeited. So
I was just looking at this article that you gave. It was talking about different. It says should be told where the ledger is on the books, where the check should go, what category they should go in. This is basically what the defense person is saying. All too often they were going into write-off categories, business expenses categories, when in fact they were personal expenses for his superiors.
Yeah, there's probably a conspiracy claim for that, that underling, and that person's probably already cut a deal. So to avoid any kind of prison time or anything like that in exchange for their testimony. So the defendant in that case, the primary defendant we're talking about, the guy that rode off the butler in the Rolls Royce, I would suggest he's probably in pretty hot water. I think the investigation on that case has been going on for over a year. The federal government doesn't really prosecute like the state government. The state government tend to charge you first and then sort of fix their case as they go. The federal government doesn't do that. They make their case rock solid, and then they let you know.
Which would make sense.
So it's a little bit different. I think there's clearly different resource levels available at the federal level other than the state level.
So how does the IRS actually distinguish an error as a result of negligence versus willful evading tax law? So
one of those would be my guy that falsified the checks. Right? I mean, that's pretty clearly falsification of documents. That's going to be an indicator of fraud, versus I can't find the checks, or I don't know where they are, or there was a flood, fire, hurricane. I can't find them. Typically those kinds of financial documents can be summons. And, if your canceled checks differ from the checks that they got from the bank that were summons, then you're probably going to have a problem with falsification of documents.
That's just crazy, though. Like, who does that? Really?
Circling back to our guy with the rolls and the Rolls Royce and the
chefs and the butlers.
Yeah, that was a pretty clearly overstatement of deductions and exemptions, right? I mean, he was obviously very hog-like in his behavior in taking deductions that he clearly knew or should have known were not allowable deductions. So a third kind of category would be concealment or transfer of income.
So this is your example you used earlier where the guy might have made $2 million and spread it all out between different people's, like put the money in different accounts. Is that the same thing?
They got Al Capone on tax evasion, not, racketeering and, being a gangster. And that's how they get a lot of drug dealers to this day, is technically, if you deal in illegal substances, you're supposed to file a tax return and claim all the income, put your deductions on there.
How do you file that? Illegal drug dealer?
I don't really know. I think there is a way. I think I've done a little bit of research on this, and there is a way. But that's, At
the bottom when they sign their name, it says consultant.
I guess it could be a recreation consultant, right?
Oh my gosh!
So
this is getting fun.
So concealment or transfers of income, to avoid the payment of tax, pretty clearly going to be indicators of fraud, and these things strung together, in particular, are going to be bad news. Some of these things taken all by themselves might just be negligence, or might be civil fraud. If you start stringing this stuff together, you're going to have a problem. So another one, this is favorite, and this makes sense, and people are really going to get this. 2 sets of books.
Do people really do that?
Bad, yes. Even regular businesses will have 2 sets of books. Like
I hate doing it. So one set enough is a chore, let alone 2.
You might have a pizza parlor that has the cash register, where sometimes the cash doesn't make it into the register, and then there's a paper ledger so they can actually keep track of the cash and the credit cards. That kind of thing. So 2 sets of ledgers are bad. If those are just slightly apart, I don't think that's going to probably be a huge problem. If it's like some small transactions are inadvertently left off, I doubt that would be a huge problem. But 2 sets of clearly different books are going to be a problem. But another one would be the falsifying of personal expenses as business expenses. Now, we've kind of beat this to like a dead horse today. the golf clubs,
But is there a list somewhere? Like, there has to be a list on the IRS's site, right, that talks about what's ordinary and necessary, or a list of allowable deductions? Because, I mean, really, this is not like something that everybody knows.
There's case law about what are ordinary and reasonable, necessary business deductions.
But is there a general list or no?
Well,
or it just has to relate to your business?
Maybe I'll put a list together of just clearly crazy deductions that you should not take. I'll tell you one that doesn't necessarily make that much sense. I've said this before, I'm not a real big fan of the home office deduction. And it's not because it's not a legitimate deduction. It's because it's so often challenged by the IRS.
Right. If it's going to trigger an audit and question every other little deduction you have, why would you even take it? And
they won't allow that home office. If there's a bed or a television in that office, they're not going to allow it. They're going to say, nope, that's your guest bedroom, and you're just trying to write off that, a little bit of square footage and whatnot off of your tax return.
Okay, so playing devil's advocate, I have to ask. You love when these conversations go with me. So, I don't take a home office deduction either. I probably should, because I do have a home office. I don't. But, we just talked about this. But, let's say, for example, you talked about the TV or the bed. Okay, so there's obviously no bed there, but TV, somebody like me, keeps an eye on the markets and what it's doing all day because it directly ties in with interest rates.
You're going to end up making that argument to the auditor, probably.
Well, I'm just curious because, even in our office, the one we have now, we don't. But there's most of our offices, most of the time, we would keep the news ticker on and pay for, cable was a legitimate expense because we would watch CNBC all day.
I've told this story before. I fought a home office deduction one time, and actually my client had 2 bedrooms in his house that he was using for his business. And so we dutifully brought pictures, contemporaneous photos of the offices to the audit. And it really did. I mean, it really was being used for business. And there was bookshelves of business books and papers strewn all over the place. And the auditor looks at me and says, "Sure is messy. I don't think I'm going to allow it because it's messy." And I just laughed. I said, "Well, you ought to come over to my office." And
gosh, I don't know if I could write anything off if that was the case.
Exactly. So, maybe if you had a television and you had a good answer, I would suggest if you're going to take the home office deduction, that you take photos and you have very clear records, and you might not want to e-file that return. Here's a little trick to audit-proof your returns, and that is, if you have something that might be questioned like that, what you do is you go ahead and attach all of your documentation proving it, and then you do a cover letter and you send in the paper return. And what you're going to do is it's going to have to be manually processed by a human being as opposed to the computer. And as they get that sort of thought, oh, maybe this is something that's good for exam, they're going to look at it and they're going to go, oh, darn, look, there's all the documentation proving this kind of weird deduction. So that's a little tip that people can use.
So it's better to actually explain that in advance and physically file it like that versus
absolutely
wait and see?
Absolutely, because remember, we've talked about the diff score in the past. The diff score is where every line on the return has a score associated with it, and if your return goes too far out of the range on any particular item on the return, you're at least going to be considered for an audit. So for some of these things, there are weird circumstances that can come up in people's lives that you have a legit deduction, but it kind of trips the diff score. You don't want to trip an audit, for no reason if you can help it. But another indicator of fraud this is kind of obvious, right? A false social security number. Okay, well that's going to be fraud.
So explain this to me, because people like me don't do this, so I don't always get the story. But are you saying, I've heard the stories about using dead people's social security number. So that's what they would do, show up and say they're this person working under that social?
Katrina, wasn't it 2 weeks ago we just did an entire show on ID theft?
Yeah, but I know, but I'm not thinking about using someone else's social.
Happens a lot with illegal aliens, where they want to file a return and get a refund, but they don't have a social security number, so they'll just borrow someone's. Sometimes legitimately, they have the taxpayer's permission, and they'll file a second, third, fourth, fifth tax return. Not usually a good idea. No tax return after the first one is going to be at least seamlessly processed. It's going to be kicked out.
And maybe they're related to the same thing, but they look different. Like somebody filing a return, trying to swoop someone else's refund, which is what a lot of what that show was about.
Oh, yeah, absolutely. The guy with the chrome car, he was kind of like the guy with the big house. The guy with the chrome car in Tampa got popped for ID theft, tax fraud, because he couldn't help it. He was making so much money, he ended up buying a big fancy car and he chromed it. And Tampa Vice detectives notice this guy because, like, who drives a chrome car in the ghetto? And they eventually figure out, they pull him over for some pretext stop, and they find, like, an entire, console full of Social Security cards and refund checks. So I'm pretty sure he's still in prison. I think the car probably got seized, too.
That's like that. I just can't even fathom that.
I kind of wish I wish I got to see the chrome car, I mean, that must have been spectacular.
You probably can. Just Google it.
Yeah, probably. Too bad we're not on TV here. We're talking about radio, so we'll just have to use the imagination to imagine how shiny that thing was until it got rained on. So another one would be claiming an exemption for a non-existent dependent, such as a child. Now, this was really common in the past.
So this is like your fake child. You're just making stuff up.
Well, my kids, are over 10 years old each, so this has been going on a long time. You can't leave the hospital anymore without that kid getting a Social Security number. And the reason is probably in like the 80s and before, people used to claim their pets. They used to just write fake names down and claim the kids. And a kid is a pretty good tax write-off. Now, it comes nowhere near paying for the kid. But
I know, right?
But
it's not even a wash.
He's not even close. But if you could invent kids to just put on there, that'd be a pretty good thing. Well, not necessarily a good thing. I mean, it would be. There are some people who would think that would be a good way to, reduce their tax liability.
This can get crazy too. Like if you have like split parents. The way I understand it, like you have split parents and it's not really clearly defined who's supposed to claim the kid, and they both try to claim it, or maybe the one thinks they're entitled to claim it, but the kids live with the other parent the whole year or most of the year. But they pretty much go off of whoever files first, right? Well,
yeah, the IRS goes with, basically the race theory. So whoever races to get the tax return done first gets the deduction. Now, under state law, the family law court order would dictate who got to claim the kid. But the IRS doesn't necessarily look at state law with any authority, and so their process or their
so if two people are filing, they're just going to reject the one that filed second and say, no, you can't claim that dependent. That social's already been claimed. Right.
I get those calls every single year.
And you tell them what? To go to the state and file a claim?
I believe.
To get it in writing?
No, I'm certainly not a family law attorney, but I believe their only recourse is to go back into family law court and file a motion.
That's what I would think.
Have them held in contempt of court for not doing what the court ordered. And at some point, that gets expensive.
And the way some of them were written before, it didn't even acknowledge it. So the divorce decrees we're seeing now, it seems like they do. At least if they say, okay, the mom takes the kid on the odd years and the dad on the even years. That's at least even.
I think it's something that the family law attorneys have figured out as a contention point, and they're trying to take care of it in the settlement. So those are basically the things that you need to avoid if you don't want to get charged with criminal tax fraud. Again, it's a 0.0022% chance of being caught. But if
I
you
love that percentage. I'm so happy that you put that together, because that is like crazy. Like I'm looking at this, it's not even a tenth. It's not even 0.01. It's 0.00.
But I'm going to go ahead and suggest that if you build a 35,000 square foot mansion that is the largest in the state of Pennsylvania, that's in the flight path of the Pittsburgh airport, you might not want to go ahead and do those things.
Well, like you said, pigs get fat, hogs get slaughtered, and if you're running around town with all kind of bling and being flashy, you're going to get some attention.
Now, I've been pretty casual here today about talking about and laughing and joking about the difference between fraud and negligence. By no means am I suggesting that anybody should understate their income or fail to file or accidentally claim their handgun or anything like that.
I love how I get thrown under the bus.
Absolutely. So, you should make a good faith effort to file your taxes on time, pay your taxes on time if you can, and that will keep you out of trouble for the most part. But
so you mean so I have to go back to this just because you brought it up again. So dead realtors and property, really not a tax write-off? I mean,
you're going to try and write off a dead realtor?
No, I'm talking about not being one of those, the ones that get robbed and empty properties. There's a lot of them on the market now. I mean, Florida still has the highest number of bank owns right now than any other state. Most states have weeded out all their foreclosures, and Florida still is number one in the nation.
I'm not going to say it's not deductible. I'm just going to say I don't think it's something that I would strongly encourage you to do. I think that there's potentially an opportunity for you to write off the cost of the training, that you get. If a realtor wanted to go get some firearms training or self-defense training, potentially could be a write-off, I suppose.
So have it all backwards. I paid cash for that.
If you have continuing ed and you could get that certified as continuing ed, for
Gosh,
sure.
our continuing ed's ridiculous. Just what we have to have.
For sure, that would be deductible. So I see a question that came in here, and
from Twitter, I believe, right?
Yeah, I think so. It says, does that mean if I owe the IRS, I really don't have to worry about getting thrown in jail? In math, 0.0022 is a pretty small percentage. Why should I worry about prosecution? Pretty good question. I don't think most people need to worry about prosecution. I mean, that is an infinitesimally small number. If your name is Wesley Snipes, you might want to worry about criminal prosecution. If you're a federal court judge, you might want to worry about it.
But that's an example again.
If you have a 35,000 square foot mansion in the flight path of the Pittsburgh airport, might be something you might want to consider.
Derek from Facebook, he wanted to know, could he be prosecuted for his business owing back taxes, even if he can't pay at the moment?
Well, we don't talk about payroll tax problems on the show that often, but payroll taxes are certainly a very serious kind of tax problem. I don't have that much time, but the business theoretically holds a large portion of the payroll tax in trust for the benefit of the government and for the employee. So typically you do not see criminal prosecutions for like a one-time failure to, for the first time you get way behind on your payroll taxes, you typically would not see a criminal prosecution. But I have actually had several clients who ran up big payroll tax bills, think in the hundreds of thousands of dollars, close the business, liquidate the assets, give the money to the IRS, but then they do it again.
Ouch.
And there's actually a name for that. It's called pyramiding. Most pyramiders don't actually get criminally prosecuted, but on the second, third, fourth go-around, the IRS is much less understanding, and there's a higher propensity of seizures and really negative collection actions that occur. Payroll taxes are very important. Now, on the other hand, if you're talking about business taxes for corporate income tax,
yeah, because it was kind of a broad scope question. It didn't really specify.
Yeah, that's a problem with questions that are in writing. But if you're talking about corporate income tax, not any more of a big deal, really. Potentially even less of a big deal than personal income tax. I have a big case right now where there's a $400,000 corporate income tax, but it's just as a result of failure to file the S-Corp election for 4 years. This person just didn't get very good advice. They are being treated as a C corporation. It's kind of too complicated to talk about here that much. But it was basically
that happened to me.
An accounting error caused $400,000 in tax. The IRS has actually been a little bit more understanding about that case because of how it was created than in a payroll case where you're literally, borrowing permanently.
Right. Well, really is bad tax advice compared to, like you said, borrowing Uncle Sam's money.
Permanently, yeah.
Uncle Sam doesn't like it when you dip in his pocket and borrows money.
No, not at all. So it's about that time for the IRS train wreck of the week. I'm really excited about this one. Just settled it yesterday. And here's the facts. My client, his name, we're going to call him Luke, not his real name, but Luke is a really, really good guy. He's kind of a good old boy Southern guy. And he came into the office and he told me this story. He said, I'm really afraid of being criminally prosecuted. I owe the IRS over $100,000. Turned out to be $111,000. And what happened with old Luke is he used to own a pest control company. And before the economy took the downturn, he was doing really well. I mean, there was lots of houses, lots of businesses. Everybody was doing well. And so there was lots of money that people had to use discretionary to pay for pest control and whatnot. Well, I think he went through a divorce and then the economy went down, or maybe, I don't know what order that happened in. But
all at once, as far as he's concerned, I'm sure.
I hear those stories quite a bit. I went out of the economy got me, and then I had a tax problem, then I had a divorce, and then I turned into an alcoholic or whatever. And God, don't do that. But so Luke is telling me the story, and he says, and now I can barely make a living. I'm working at the pest control company instead of owning it. I make about $30,000. Darrin, what can you do for me? So remember, he owed $111,000. And when we went through the offer calculation, remember that's monthly disposable income times 12 plus his assets equals the amount of his offer. Well, he had negative monthly disposable income, and he had no assets. So I just went for it. I went ahead and filed an offer in compromise, and I offered $50. That's the lowest I'd ever offered, ever. And I just did it, honestly, because I wanted to see what would happen.
So, like, the guy has no money. He's spending all of it.
Exactly.
He's expenses far exceed anything we got coming in.
And I told Luke, hey, Luke, I think they're probably going to counter, and they're going to want more than $50. But hey, if we get it done for under $1,000, I mean, this would be a huge win, right? And he says, Darrin, if you could get it done for under $5,000, that would be absolutely phenomenally
fantastic. He owed $111,000?
$111,000. Well, we got the acceptance letter on that case yesterday at $50. So Luke is pretty darn happy. And, it feels good to help people like that. I mean, this was by far the biggest problem that Luke had in his entire life. And it's kind of a weighty responsibility that I take on, where people trust me and have faith in me to take care of the biggest problem they have in their life. I mean, everybody has problems, but I get the biggest problem they have in their life. Well, we settled it for $50. He still has to write a check for 40 of that because he had to pay $10 as a down payment. And the advice I gave him was, hey, you need to send that right away, okay? Don't wait 5 months.
So he literally made installments on a $50 settlement, really?
Well, you only have to put 20% down. So if my math is right, he had to pay $10 down to get the...
He's really showing that hardship.
So it worked out really well for Luke. It will not work out that way for every client or every situation. There's plenty of people that don't qualify for an offer in compromise. But if your facts and circumstances line up, really spectacular things can happen.
Well, you never know.
Yeah.
You might get somebody on the other side of the table that's having a good day.
Well, that's why it makes sense to go ahead and, if you have a tax problem, to give me a call, and at least we'll talk about it. I'm going to give you the straight scoop every time. If you're not a good candidate, I'm going to tell you right off the bat. I have no desire to work for people where they're not going to get a good result. For sure.
Well, I remember one thing you told me a long time ago. You said, unlike most businesses, I really don't like repeat customers.
We're starting up.
You'll take the referrals, just not the repeats.
It's kind of depressing, honestly. When I was doing criminal defense work and the crack dealer would come back 3, 4, 5 times, it wasn't really something that, it didn't really float my boat, I mean, I understand that people need second chances and, need to start their life over. But it gets a little depressing when I've given somebody advice, taking care of the biggest problem in their life, and they come back with the same problem 2, 3 years down the road. Now, I'll help them, but we're going to have a different kind of conversation because it sounds like that person kind of needs a little bit of tough love.
Right.
I still want to love them. I still want to fix them.
I'm thinking if you're tougher on them, it's a lot better than the IRS being tougher on them.
Right. And if I'm a little bit tough on them, it's just because I care and I don't want them to end up in bigger trouble.
Exactly. Carl had a great email question. We definitely want to make sure we have time to get to it. He says, I'm currently on a payment plan with the IRS, but I'm afraid I won't be able to make or pay next year's taxes on time. That will put me in default. Should I cancel my payments I'm sending now and use the funds to hire you instead?
You gave me 6 seconds to answer that, Katrina. I would say that generally speaking, you're going to want to pay current taxes. If you can only pay current taxes or back taxes, you want to pay current taxes.
Gotcha.
So that's, probably ought to just call me and we'll have a discussion about what the right strategic thing to do is in that situation.
888-GET-MISH, M-I-S-H.
That's 888-438-6474. I'm Darrin Mish, your IRS solution attorney.
I'm your co-host, Katrina Madewell, and for this week,
we're out.